Vacant inventory on the US housing market is exploding right now as we see more and more homes sitting empty with big price cuts. Data I just pulled from Zillow shows that the number of for sale inventory properties has gone up over 60% in the last several months, while the number of for rent properties has also gone up by 60%, indicating that we're in a double-barreled housing crash that's an absolute nightmare for real estate investors right now. We are seeing investors, particularly these big corporate Wall Street investors, absolutely freak out. They're panicking. They're fire selling much of their portfolio as this higher inventory is leading to declining prices and declining rents. And I believe that this investor fire sale is going to be a subprime crisis 2.0 in terms of its impact on the housing market. We're going to see this inventory go up, not just for the short term, but for the long term. There is going to be a perpetual flood of homes coming onto the market and sitting empty, much like there was in 2008, 2009. Now, back then, 15 years ago, during that last housing crash, it was about foreclosures, and the big surge in foreclosures led to lots of new inventory. But today, it's going to be a little bit different. Yes, we're going to have the foreclosures, but the big surge in inventory is mainly going to come from investors dumping their properties. Because right now, depending on the source, there's anywhere between 20 to 30 million investor-owned homes in the US housing market. And if only 5% of those investors sell, say because the value of their property is declining, say because the rent that they're getting is declining, say because they can't find a tenant to rent their property to, that would dump 1.3 million homes onto the US housing market for sale, which would double the amount of inventory and lead to a complete collapse in prices. Now, it's very important out there, if you're a home buyer or a real estate investor wanting to take advantage of this corporate fire sale in the buildup of inventory, you got to understand it's going to occur in certain cities more than others. In particular, it's going to occur in cities that meet three main criteria. Number one is a lot of investor activity. Cities like Phoenix and Atlanta and Dallas and Charlotte and Jacksonville have had nearly 1/3 of the homes being purchased by an investor. So if you've had a lot of investors buying the last 2 to 3 years, you're going to have an even bigger fire sale as this housing crash gets worse. But number two, it's also going to be markets with a lot of home building that have this inventory deluge, because these builders, as I've said in previous videos, they're going crazy right now, building a record amount of homes and apartments in many of the same cities actually that the investors are buying in. So these investors and these builders, they're basically teaming up to crash these housing markets, and they're not doing it intentionally. They're just doing it because they all decided to allocate their capital to the same exact cities and the same exact neighborhoods over the last 2 years. Now, this is the inevitable result of all of that capital flooding into these housing markets. Yeah, it caused prices to go up on the way up, but it's going to cause the crash to be even worse on the way down. And the thing I've been really harping on the last couple weeks, everyone, is not just a surge in for sale inventory and declining prices, but the surge in rental inventory and declining rents. This is what has me most excited right now for you guys out there hoping for a cheaper home, is that the rents are now starting to go down and the rental inventory is just going off the charts. It's up 60% over the last 5 months. And if we look on Zillow here in different counties around America, you could just see huge numbers of vacant rentals sitting empty with landlords doing big price cuts. And what are the markets where this rental inventory of homes and townhomes is building the most? Well, according to the data I pulled from Zillow, King County in Seattle is number one. Rental inventory has gone up 135% over the last 5 months, while Detroit is number two, Dallas is number 3, Miami is number 4, and Contra Costa County and San Francisco is number 5. And largely you can see on this list of rental inventory gainers, it's a lot of Sunbelt markets as we head further down this list. So I would expect cheaper rents in those markets going forward, as well as a lot of investors fire selling homes in those markets. Because if the investors can't rent out their property, well, they have no reason to hold their property, especially in a declining price and rising interest rate environment. Now, what really actually intrigues me though, folks, is not just the markets with higher rental inventory, it's the ones also with higher for sale inventory, that double-barreled housing crash I've been talking about a lot. What are the cities most in the crosshairs of this double-barreled crash where the inventory is surging on both accounts? Well, let's take a look at this scatter plot and find out. It's the counties in the top right of this graph. like Collin County in Dallas. Over the last 5 months, rental inventory is up 124%, while sale inventory is up 97%. It's Gwinnett County in Atlanta, where for sale inventory has almost tripled and rental inventory has doubled. It's Hillsborough County in Tampa, where there's been an 84% increase in rental inventory and a 96% increase in sale inventory. And what's scary about this double-barreled housing crash in these cities and other parts of America is that we've never really experienced this in the US housing market before. Like, we had a for sale bubble in 06-07 that was a for sale crash for over the next 5 years, but we didn't actually have a rental bubble back then, and we didn't have nearly as many investors in the market. So this is uncharted territory. No one really knows for sure how the housing market is going to react to this, with the 20 to 30 million investors owning at a time when both prices and rents are going down. My prediction is that this is going to be historic. This is going to be something on par with 2007, perhaps worse. Because the way you got to think about this, everyone, is that the more speculative owners there are in the housing market, and by speculative owners, I mean people who own homes but don't live in the homes like an investor, well, that just creates the potential for way more volatility in terms of inventory, in terms of prices. Because if you don't live in the house that you own, it's going to be a much easier process for you to sell that house, because after all, you just are treating that property as an investment vehicle, a profit generating tool. So when the profit runs out, like when prices go down and when rents go down, there's no point in you owning as an investor anymore. And this is why we're going to see this big investor sell-off over the next couple of years, which is going to be kind of hard for people to wrap their head around at first. I think people are going to kind of struggle with understanding how so much inventory is going to be coming onto the US housing market over the next couple of years. They're going to say, well, where did this inventory come from? Well, folks, it was always there. The inventory was always there in the background because it was houses that were owned by people who didn't live there. So all it would take is a housing crash, a recession, a downturn in the rental market to trigger all of that inventory being put up for sale and for rent. But it's important to understand we are in the beginning stages of this. We are just now seeing the shadow inventory and the vacant homes come out of the woodwork. We're going to see more and more of this into the future, especially as the recession gets worse, everyone, because right now the unemployment rate is still at a record low. And with a record low unemployment rate, we're already seeing just a cataclysmic drop in housing demand. So what's going to happen if the unemployment rate doubles or triples? Well, housing demand, it could go down to the lowest levels in 40 or 50 years, just when home prices and rents are near all-time highs and when investors are trying to sell. And it's going to be a massive deluge, a massive liquidation. And the way to understand where your city and housing market is in this crash is to track this inventory data on the sale and rental market each and every month. Because it's telling you what's going to happen in your city and housing market over the next 3 to 6 months. And right now the message is housing crash is getting worse, prices are going down, rents are going down. Get ready for a mass investor liquidation. Now, before signing off, everyone, I want to warn you all of housing crash deniers. Be very, very careful of these people. I'm seeing more and more housing crash deniers out there in the real estate space. I'm seeing them even in the comments to my videos sometimes. And these are people who 6 to 12 months ago said that the housing market would never crash. The Dave Ramseys of the world. They were saying home prices would go up forever. Let me know in the comments, everyone, if you remember the people who were saying that 6 to 12 months ago. Well, now they've adjusted their argument in terms of denying the housing crash. No longer can they reject the notion of home price decline. So instead, now what they're doing, and important you don't fall victim to their methodology and psychology, is they're saying, oh, a 5 to 10% decline in Austin or Phoenix in 4 months, that's nothing. That's not a crash. No big deal. And these people would be right in saying 5 to 10% on the surface isn't a big deal, but in only 4 months, that's actually a huge crash in the housing market. It suggests that values in Austin and Phoenix could go down by 25% over the course of a year, and potentially even more over several years. So what I want to key you guys in on, if you're someone looking to buy a house, just got to understand these value declines are just the start. They're the validation that yes, the housing market is crashing, and they will continue to go down. They will continue to get cheaper for the reasons I outlined in this video.